Is it a buyer's market? It's sort of a buyer's market. Let me tell you what I mean by that. Based upon the numbers, demand, supply, division, mathematics, no. It is a slight seller's market. But the few buyers that are out there and that are active right now are very tentative. They're cautious about interest rates. They're very careful about monthly payments. They're highly concerned about not wanting to overpay, and they're extremely critical of homes right now. So no more 10-minute tour, write an offer, craziness. Those days are long gone. More likely, a buyer's going to look and see very carefully, is there anything wrong with the house? Is it priced a little bit too high? Are they going to have to replace some carpet? Is the location not ideal? Is the layout of the home not exactly what they want? They're either going to A, quickly move on, or B, they're going to want a discount. From that perspective, buyers are controlling the marketplace right now. Now, a well-priced home that is in perfect shape, in a great location, with a beautiful layout and nothing that needs to be done, yes, that house is going to sell fast. It might even get multiple offers. It might even go over asking price. But that's a perfect house. Most of them aren't perfect. And that is why expected marketing time is doing this. Take a look at this expected marketing time graph. Expected marketing time is current inventory divided by the last 30 days of sales. Very simply, it yields the number of days for all of the homes on the market to sell at the current demand levels if they remain the same. Now, notice on the year-to-date number in orange, the upward trend. So it's still officially a seller's market. It's below 90 days expected marketing time, and it's definitely warmer than 2019, for example, but it is changing fast. And the assumption that the demand over the future is going to remain the same as the last 30 days is very difficult to justify, especially with interest rates changing the way they are. Now, over the last 2 weeks on the supply side, inventory is up only 18 homes. Now, that is essentially unchanged from a percentage standpoint. Typically, however, inventory drops at this time of year. So instead of inventory dropping, it stayed the same. The main reason for that, fewer people are buying homes. Look at this on the demand side. Sales are down 11% in the last 2 weeks. That is the largest drop of the year. In the past month, sales are down almost 20%. Now, 20% reduction in sales is 4 times the average for this time of year, the fall marketplace. If rates continue increasing, the drop is going to go up even more. Now, last year at this time, sales were 76% higher, which is an astounding statistic. Because of this, expected marketing time then jumped, this time by a 10% margin up to 77 days. That's just under balanced market territory. Interesting, by price, the opposite happened, especially in the luxury market. Demand increased above $2 million by 5%, with inventory dropping about a 1%. So as a result of this, in the luxury market above $2 million, expected marketing time actually dropped a bit. That said, it's still a buyer's market. Now, across all the price ranges, you can see expected marketing time went up, especially below $1.5 million. So the only real category change was in the $1.5 to $2 million range, and it was pretty significant. It went from ever so barely a seller's market all the way to ever so barely a buyer's market. It skipped the balanced market altogether. So with that, let's take a look at a handful of cities. In Aliso Viejo, we had a 52% increase in expected marketing time. It went from a solid seller's market to just barely a seller's market. By far the biggest change of all the cities we're going to look at. Inventory went up by 6 to 64 homes. Costa Mesa got a little bit cooler. Expected marketing time is up 5 to 73 days. That's despite an inventory drop of 7 down to 100. So the demand dropped even further in Costa Mesa than Aliso Viejo, for example. Irvine got cooler as well. At 87 days expected marketing time, that's up 7. We are almost exactly at 90 days, which is balanced market territory. Inventory in Irvine dropped quite a bit by 19 homes down to 347. Newport Beach actually warmed up a little bit from 136 down to 128 days expected marketing time. It's ever so barely a buyer's market in Newport, almost a balanced market. Part of that is because there are 5 fewer houses to buy for a total of 136 in the city. San Clemente, again, cooled off. From 70 days up to 77 days expected marketing time, just a slight seller's market. There are 3 more homes to buy in San Clemente for a total of 115. Now, if you'd like more detail on these cities or any other city in the county, please contact me. And finally, if you would like to hear my specific system and the strategies that I use to help buyers and sellers be successful in a marketplace just like this one, please contact me. My number is 949-413-2371. You can email me, michael@housemgroup.com. And then lastly, if you've been watching this on YouTube, there's been this little letter I right above my shoulder. If you click on that, that will take you to a landing page on my website where we can set up a strategy session at that time. Thanks so much for watching and have a great day.